Oh, stop that. Okay. Put that over there. Oh, we are live. We're live on YouTube. What up? Let me get the Instagram started. So we got everything running. We got TikTok. How's everybody doing? What do you think about the market? Questions. We got to go over the macro conditions. What up, Yassine? Is that Yassine? I haven't seen you for a minute. How you doing? Macro conditions first. What are the macroeconomic conditions? Um, no, you're good, bro. I've been doing one live a week, still building the course. Still building that course. So I'm doing a lot of recording, but we'll be there. So yeah, macro conditions, where's the market at technically, right? Technicals, macroeconomics, a little bit of fundamentals that we're going to head into, some expectations. Where's the Fed at? Where's inflation? What does it look like, right? If you are on YouTube, you should be able to read on the bottom. Still waiting for it. Yeah, you should be able to read on the bottom a couple things we're going to go over. If you want to see that, also on TikTok, right? I got a couple. Yeah, we got a lot of content to go over. Kind of see where we're at right now because the market is getting to the point where it's a little confusing. Are we going higher, or are we going to, is this a rotation where we continue higher, or is this a big correction? Right? Is this a correction? And we'll definitely go over that. So first, let's go ahead and start with what are some main concerns? I'm going to just look over some of these charts before we get to some of the main concerns that we have on a technical basis. We'll really quickly go through some of the technicals. The S&P is pretty overheated at the moment. It's pretty overheated. It can now when you're in oversold territory like this, it can overheat further. You can overheat for another 3-4 weeks, right? We can overheat all the way through August for sure. But we're getting also a lot more sensitive to negative news. We're getting a lot more sensitive to something that the market doesn't like. We saw that big correction yesterday, right? What was that? A 2%? It was a pretty good correction for S&P. It was a 1% correction. It wasn't that big, right? It was for the intraday. It was pretty vicious, but it wasn't tremendous. So we can stay overheated. So it's kind of confusing. Where are we at right now? What are things going to look like? Let's go ahead and start off with the macro conditions. I think we got everybody in, right? We got everybody in. So they know where we're starting. Okay. So S&P overheated at the moment. We're starting to see small caps pick up a little bit, right? This is the rotation everybody's talking about. Small caps are starting to break previous resistance. You see the RSI is a little overheated, but we're definitely starting to break this long-term, right? All the way back from, what is this, 2 years ago? We're starting to get above that level for small caps. And a lot of people are running into the small cap trade. There's some positives, there's some negatives here, right? It's not definitive that we are, it's not like completely clear that small caps are going to catch a bid here for, and go right back to all-time highs, 240, 250. We're not sure about that yet. So we're going to go over some of the conditions, right? It's not my job to tell you what to do, but to give you a framework, a layout to what the market might be thinking. Okay, what we might be seeing going forward. So let's go ahead and start with melting inflation. First and foremost, inflation is melting. You should be able to see it here on YouTube. I'm going to throw up the month on month, and I'm just going to talk about it for you guys on TikTok. Okay, people are still fighting inflation, saying that inflation is coming back. I see it all the time. Inflation's coming back. 1970s, they still saying the same stuff. Inflation is melting away. Right? Inflation is melting away. It's not going higher. We've been talking about this for months, that inflation would continuously fall. Let me change this. This is not what we're looking at. Let's go to yields, which is why we're seeing 10-year yields. Okay, I'm going to throw on the yields chart here, which is why we're seeing 10-year treasury yields. And this is the market that predicts inflation and growth collapsing, right? Yields are collapsing. Interest rates are collapsing. They do not believe there's, inflation is coming back. Inflation is cooling, but so is the economy. So we are getting melting inflation on a month-over-month read. We just had a negative read back on YouTube. We just got the first negative month-on-month read for CPI since the pandemic 4 years ago. So momentum in the short term is picking up to the downside. We're getting an increase in well, it's really a decrease. It's an increase in momentum that prices in some areas are actually deflating. It's not complete deflation, but prices are falling in some areas. And for the most part, inflation momentum is not there anymore. It's not picking up. It's probably going to be sticky to low, sticky to falling, which is good. It's perfect. All right. So inflation is melting, and that sets up, hey, the economy is also slowing at the same time. Are you also talking about Bitcoin? Yeah, if you look down there, we're going to go over Bitcoin because I still believe crypto is setting up for the biggest trade here, not just, we saw Tesla finally pop. Okay. But I still think crypto's setting up for the biggest trade, right? Pretty big. What do we got here? Jervine says dovish to neutral pal. I love it. Love it, Jervine. Okay, you got the picture up. I see you, Jervine. Okay. Dovish to neutral pal Wednesday on his testimony with the House and the Senate. Lower than expected US CPI, 95% chance of September rate cut according to CME markets, 100%. 100%. What do we say? That Powell needs to cut, right? He's getting closer to cutting because inflation is starting to show progress. I think I can do the year over year inflation here. Let's see if I can find it. I think it's year over year inflation rate. Here we go. Year over year inflation rate. Let's throw it up on here and let's turn this into columns. We'll turn them all red. Yeah, let's get them red so we can see sort of what we're looking at here versus the market. All right. So as you can see, it pretty much matches up. You said we aren't. I'm not sure what you mean, Doifer. What up, Doifer? What up, TikTok? So you can see that rates are, as inflation started to cool, and this is everybody screaming, inflation's going higher, right? Inflation's going higher. Look, the rate of inflation is falling. The level of inflation is up. Obviously, the level of prices aren't going back down. They never do. The Fed keeps printing money, 2% rate. It's higher than 2%. The fiscal deficit is climbing. Governments are spending more money into the economy. They're printing more money. Inflation's never going back down. Prices overall are never going back down. What's going to happen is the rate at which they're rising comes down, right? So the bond market is sniffing this out. You can see as inflation falls, the bond market makes, it falls. The bond market is coming down. Now, I don't believe the bond market will just collapse. I thought at first it would, but I don't think we're going to see that because it's an election year, and we're going to get to that. Right. But keep in mind, rates fall with the inflation rate falling, right? Because this is a exact reflection of bond purchasing, right? Investors are now purchasing bonds as inflation falls for protection against the recession. That's what we're starting to see, protection against the recession. And as they buy bonds, rates come down because they're literally tied together. And I think we're going to get a bond breakout come October. I think we're going to see the bonds starting to break out here. So inflation is melting, right? Not super fast, but it's a slow melt, right? It's not a collapse. It's just a melt of inflation. We are getting that. And rates are coming down. Okay, let me get my cue back to see where we're at. And we're starting to see the dollar kind of roll over a little bit. This is good for risk assets, right? We're starting to get as inflation cools, we're starting to get the dollar roll over. If you go all the way back here, let me show you guys over here on TikTok, when inflation came down, the dollar really decelerated a lot. And then it picked up. Look, inflation bounces, goes higher, the dollar picks up. So the dollar in rates, right? Treasury rates in the dollar are sort of guided by inflation at this point. So as inflation continues to melt, we're going to get lower interest rates or a lower level of interest rates. And we're going to see the dollar really start to collapse, not versus other currencies, just the US dollar. And as that happens, crypto goes higher. This is why I'm telling you the big setup is still here for crypto. We're going to get into it, but the dollar collapsing under this level, this is a pretty big level here. Let me throw inflation off a little bit. Let's take this off. As the dollar gets under this level, boom, Bitcoin's going to explode. I'm telling you right now, Bitcoin's more correlated in this cycle to the dollar than it is interest rates. Kind of weird, but it is, more dollars that come out of the system. They're going into something else, right? So you don't feel bad providing this kind of information. Potter Stocks. Oh, what up, Potter Stocks? Let me know what you disagree with. I love people who disagree with me on TikTok, right? A lot of people just want attention. They don't really know what they're talking about. Anyways, Potter Stocks, don't get your feelings hurt. Let me know what you disagree with. So as the dollar collapses, we're going to see crypto explode. We're going to go over that correlation too. Inflation is melting, okay, on a month over month. Now the SOM roll is starting to pick up. Let me show you guys what the SOM roll is. I'm going to switch over here. I'm going to switch windows to the SOM roll. And that's really just an employment. It's really just the SOM roll is a recession indicator. Okay. It's a recession indicator. I got this big. Yeah, I got it big here. I'll show you guys here on TikTok. So the SOM rule basically is it's a rolling 3 months of unemployment, right? And once we get to 0.5, meaning unemployment has risen 50 basis points from the previous lows, once it rises 50 basis points, you're pretty much in a recession. You're pretty much in a recession. Now we're at 0.43. So one more print higher, right? We just got one more print higher. If we go to 4.2%, then you're basically in a recession. Okay. You're basically in a recession. And it's, what does that have to do with stocks? Not a whole lot. I'm just, we're going over the macro conditions at the moment. If we're in a recession, we should see interest rates come down. We should see the dollar. If it's a bad recession, we'll see the dollar go up, but I don't think the dollar goes up this time because the dollar is sniffing out more stimulus from the Fed. So we're setting up the macro conditions here. See, did this guy respond? No, he didn't. So we're setting up the macro conditions. We're heading into a recession. Do me personally, do I think it's going to be this wide, destroy, collapse, and everything falls apart like people scream? No, I don't think so because it's an election year. It's an election year. The Fed can cut rates. We're at 5.5%. It's, stocks are going to respond to this. But for the most part, inflation is melting, unemployment is climbing, and the ISM, the diffusion, the amount of sectors in the economy falling apart, or the amount of sectors actually decelerating is picking up. That's the ISM. Services are falling. ISM services and manufacturing are both in contraction territory. They're both falling apart, right? Now, it's not like, they're not going to zero. They're just right under 50. They're trying to reaccelerate from the lows. I got the ISM on here. Let me just show it. So here's the ISM. Let's go ahead and well, look, the ISM and the dollar have actually been climbing together. That's kind of interesting, right? Right. Wow. Look how correlated the dollar is to the manufacturing data. That's pretty correlated. I'm going to make this look a little different so you can, let's switch this over to an area. There we go. And so we can highlight it. There we go. So the ISM is basically a measure of all the sectors in the manufacturing economy. And, are all these sectors starting to recover or are they declining? Right. Once you get over 50, you're pretty much getting an economic reacceleration. So we've been reaccelerating from 2023. Okay. But recently we've been cooling down. So it's up and it's down. It's up and it's down. But you can see how correlated the dollar is to the ISM, right? So if we just take a step back, inflation is melting. Okay. Unemployment is rising. We're getting towards, we're getting to the point where the Fed has to make a decision here. Powell has to cut. He has to cut at some point because inflation is showing progress. Unemployment's getting to the point, and I know I keep repeating myself, but there's new people jumping on all the time. And at the same time, the ISMs are negative. So we're near a cut. And like Jervine said, 95% chance the cut is in September. July would be a huge surprise. I really doubt it. So September is the cut, what we're looking at right now, right? September is the cut that the market is starting to anticipate because inflation's down. The economy is pretty much cooling down, and the Fed does not. Now, a lot of people think, hey, if why don't they just keep rates higher? Because if you go into, if we get an economic collapse and GDP goes down, we still have a lot of debt to pay. If GDP does not pay the debt because growth falls apart, now you have to print more money. So inflation will reaccelerate actually if there's a recession because there will be more stimulus from the central bank and from the fiscal policy. They don't want that, right? It's a very sensitive situation. So you definitely need to calibrate things and balance things out. So we're going to have to cut a little bit. Now, stocks are pretty much overheated at this point. So the question is, where's the rotation at? Are we going to get a pullback? And I wanted to go over this too for stock. So right now, the macro situation is going from, it's not stagflation. It's not we're not looking at stagflation. Okay, just get that out of your head. I know a lot of people keep saying that. We're looking at macro. Let's see, what would you put this as? It's almost macro winter in the short term because growth is down and inflation's down. So we're looking for stimulus, and then we're going to go back into macro spring. I think we're still in macro spring though. Macro spring is growth is still reaccelerating, right? And I know that we're talking about it falling apart, but the ISMs are still climbing. Growth is reaccelerating. Inflation is finally starting to come down. Finally starting to come down. And that's why you have the market really making all-time highs and just, overextended, a little overheated because it's sniffing out rate cuts. It's sniffing out rate cuts and more QE. And I do think we get a correction pretty soon here because we're overheated. We're overheated for sure. All right, so enough on that. September cut, disinflation rotation. So the rotation, let's get to the rotation. You make sure we didn't hit anything else here, miss anything else here. Oh, the number of bankruptcies are, up, but the number of credit going out to the system are also picking up. Treasury general account, we're going to hit that because the small caps are what people are looking at, right? Small caps. They want to go into small caps. Are we going to get a rotation in the small caps? Are we going to come out of the S&P? I don't think so. I think that the market is overheated overall. If we look at the S&P, let's go to SPX real quick. SPX, okay? Well, we're starting to get the RSI for make a second round above overbought. We're in a second round of overbought. We had that nasty pullback. Now we're making a new high. That surprised me, but NASDAQ is not. Let's go to NDX. NASDAQ is not making a new high yet. Okay, NASDAQ is not there yet. It looks a little weaker, and this is pretty much the rotation that everybody's looking at, right? NASDAQ's not as strong as the S&P. We look at IWM, boom, exploding. So we look, obviously we have a rotation into small caps for the short term. But the question is this a short squeeze or a sustained rotation? It could be a short squeeze. IWM was like the 13th or 10th most shorted index ETF in the market. So this might be just a short squeeze for the short term. And if Powell continues to be dovish, then small caps might go higher for sure. But you got to take into account the other thing, which we're going to talk about here in a second, which is that the US Treasury is probably going to be printing more money and rates are going to start to go up again, right? So we're looking at that September cut, disinflation rotation. I don't want to get too mixed up. Well, we are getting participation. Let's go over that really quick. So this supports the rotation. Okay, we are getting some support on the rotation trade. Where is it at? Here we go. The amount of stocks above the 50-day moving average are definitely picking up here. So we're getting a rotation. This tells me big tech is not going to, just collapse, but big tech might be resting for a minute. Now we're getting a lot more stocks participate, and this is good. It's not just small caps. I think it's even better that Dow stocks are going up, and we're going to go over some of those. But Dow stocks value are definitely going up, and because they're anticipating a rate cut and they're more interest rate sensitive. Big tech isn't really interest rate sensitive because they don't care. Higher rates fuel their cash flows. They really don't care. It's the interest rate sensitive stuff, the industrials, the home builders, the manufacturing, those are more interest rate sensitive. And now that we're getting closer to cuts, we're getting more participation from those stocks. All right. Jervine says unemployment goes higher means quick. The Fed will be to cut. Labor is their top mandate as well as price stability, 100%. So the quicker unemployment climbs, the quicker we get rate cuts. And I think a lot of people are just trying to figure out, hey, are we going to get a correction before the rate cut? We could. I think we're a little overdone, and I think we might get a correction into earnings, which we'll go over to next. Veronica says, I have a feeling S&P will reach approximately 5,900 to 6K, then back down in September. Yeah, that's tough to tell at this point. It's really tough to tell. Put to call ratio is very low. Usually you get I talked about this in the video. When it gets this low, you usually get puts starting to pick up. I still think we're going to get a correction earlier into earnings. I think we get an earnings correction. I don't know how big it'll be, right? But I think we're going to get earnings, or I think we're going to get a rotation, and it's not going to be just small caps. I think the rotation is going to go into, let's go back to our macro here. into some other stuff. You got that big run on Tesla. We also had a big run on Tesla. Okay, but Tesla's overextended also. And it can go higher for sure. But let's look at some of the big Apple. Let's look at Apple. Overextended. Okay, Apple's also in overextended territory. So we have a lot of big caps in overextended territory. Let's look at Microsoft. Microsoft is also overextended, and that RSI is telling me that it's starting to calm down, it's starting to cool off. So this is why I am less bullish on, tech. I'm less bullish on tech. I'm not really bullish on IWM. I'm not so bullish on small caps. And part of that reason is as we go into earnings season, if GDP is coming down, if earnings are coming down, I'm sorry, if growth is coming down, a lot of those companies, yes, they need rate cuts, but their earnings are not going to be that great. Okay, their earnings are going to be not forecasted good at all. So it's rate cuts versus earnings, right? It's rate cuts versus earnings. What are you going to do? I'm not going to make the bet that, as inflation cools, they don't have as much pricing power because they can't raise prices anymore, right? A lot of these smaller companies can't keep raising prices. They're going to lose demand unless they cut prices or cut labor, which accelerates, closer to a rate cut. And that's fine. We get closer to the rate cut, but I want to go with what is for sure going to go higher. Okay. And this is not a, advocation of any trade. What for sure is going to go higher. So we get these are overheated stocks, right? Big caps are overheated. We just look at QQQ and it's pretty overheated. It's pretty overheated. Boom, two rallies to that, 81 RSI, whatever. Now, the trade that I'm looking at right now over going into October is a TLT. Okay. I'm looking at bonds. I'm looking at bonds and Bitcoin. Bonds and Bitcoin because the recession is coming, unemployment is rising, the Fed's going to be forced to cut rates. That's going to take bond yields higher because people are going to freak out. How bad is a recession? If earnings don't meet expectations, stocks are going to correct pretty hard, especially as we're overheated, right? Keep that in mind. Stocks are overheated, so they're becoming more sensitive to negative news. They're becoming way more sensitive to negative news. Now, yes, CPI is down. Inflation is not the concern anymore. The concern is, will the Fed cut in time before growth really starts to fall off? Okay. And markets look 8 to 9, 12 months ahead. They're not looking at next month. They're looking 12 months ahead. That's why I'm saying, hey, look, if you look ahead, the market kind of priced in rate cuts already. It's already priced in 2 rate cuts at the moment. And earnings need to perform, but I still think the rug is coming, the rug pull, not a bear market, but I think we're going to get a rug pull. We might have one more burst higher, okay, for the stock market, maybe one more burst higher. And if I measure, we do some Fibonacci here. Okay. I think at most S&P goes to 5,700 before we get that big correction. So somewhere in between, and we got earnings today, right? The bank started off earnings today. Somewhere in between here, I think we're going to get the correction. Is it going to be this deep? Maybe, maybe not. Or is it going to be as deep as it was last summer? Okay. I don't know. I really don't know. I just know we're a little overheated at this point. And it's not just the daily chart, it's the weekly chart. And I just want you guys to keep in mind when you're overheated, when you're moving this far up, it's going to be a lot easier to get and this is bearish divergence. It's going to be a lot easier to get a correction, anything negative if earnings don't beat as well, right? Where's Nvidia at? Nvidia's starting to come back up again. Look at how overheated Nvidia is. This doesn't continue forever. And I think I'm not saying that, the market collapses, but I think we're definitely going to cool down for a second. Dow Jones broke all-time highs. Yeah, Dow Jones looks better. I'm actually a little more bullish on the Dow Jones. It's not as overheated as the NASDAQ. S&P is a mix of a lot of things, but the Dow Jones is not as overheated. Small caps are going to struggle because of earnings. Small caps, if they have bad earnings, it's irrelevant. It's irrelevant that the Fed might cut rates because if they have no earnings, it doesn't matter. You might get a couple companies burst higher, but small caps are going to struggle because guess where all the unemployment's coming from? Small businesses. It's not coming from Apple, Amazon, Google, Facebook. Tesla, Nvidia, right? You're not getting massive unemployment. Those companies are not hurting. It's the smaller companies that are hurting. So Dow Jones, not too bad. Now, I don't like the Dow Jones either. I'm gonna look at regular companies here. I'm gonna look at companies inside the Dow Jones. You guys know what I'm looking at. So the problem with small caps, what I'm getting at here is, yes, they can do better with rate cuts. Small caps can do better with rate cuts, and you're kind of getting that rotation. Is it a false breakout? I don't know. It looks good to me. I mean, I think they go higher for sure, but I think the only issue is as we roll into earnings, if those misses are if guidance is lower, you always got to think about guidance when it comes to earnings. Not necessarily did they beat earnings. It's going to be, where's your guidance? If guidance is very poor, right, for the next quarter, if guidance is poor, then this might just be a blow off top and it comes right back down. Okay? And the other threat to small caps is if the Fed in the next couple meetings or in the next meeting, if the Fed says we're not sure, then this is going to be a threat to IWM. It's going to collapse because it's purely based off of rate cuts coming sooner than expected, which means that if the Fed is not as dovish as the market wants, if the Fed's a little more hawkish at all, if they're hawkish at all, and there's reason to be hawkish, I'm going to give you the reason to be a little bit hawkish. Do I believe inflation's coming back? No, I don't think so. But in the short term, small caps are moving off a sooner expected rate cut. Now, if we go to oil, okay, oil oil is still pretty elevated, which means next month we could get inflation not fall as fast. Maybe it doesn't fall as fast. I still think it comes down, but maybe not, maybe it doesn't fall as fast. Um Over the next, now we're at summer peak for oil demand, so I think we're definitely coming down. I don't see oil really breaking out anymore. I think the wars are starting to cool off, right? The wars are cooling off. China coming back. I mean, I think it's going to take a while for China to come back. So I think oil's done going higher. This is why I'm still bullish long term. I think we go much higher. But the case here is why small caps have a problem, because they cannot raise prices anymore. Okay. They can't raise prices anymore. Their earnings next month are due to come down because unemployment is rising. People are spending less money. GDP is still GDP is not very strong. It's underperforming. GDP is not strong. And at the same time, you know what else is fueling small caps? Bond yields collapsing. Okay. Bond yields coming down. These are interest rates, long-term interest rates. Those are coming down. This is good. This is good. But what's going to happen because part of the thesis here is that Joe Biden, the current administration, if the recession continues to accelerate, here's my expectation. If we go to 4.2% unemployment, we're going to get fiscal stimulus. We're going to get stimulus from the White House. That's what I believe. I could be wrong, but I think Biden is going to do something. He's fighting for his life, obviously, right? Literally fighting for his life. So he's going to print money. And Trump is doing no different. Trump also wants to print more money and make more promises. The last time we fell because of good inflation report from a good inflation report, employment, Trump won the debate and rates soared. Why? Because the expectation of a Trump win means, rate cuts. I'm sorry, not rate cuts, tax cuts and more fiscal spending. More fiscal spending means the bond market, and this is what the bond market is. The bond market is saying, hey, we're going to push rates up. We're going to sell bonds off because Trump is going to spend more money into the economy. Stocks are going to go higher. Inflation possibly could stay sticky. So forget it. So rates went up, right? So either way, IWM might perform over the next month, but if Powell isn't as hawkish, rates go up again. Or isn't as dovish, rates go up a little bit. If Trump comes out, rates go up a little bit. If Trump comes out and he leads in the polls, you're going to see rates get sticky. They're not just going to collapse here. So this is an over-exhausted move. Maybe it has more room to go down. A little exhausted, I think, right? So I'm not a fan of small caps because the earnings suck and they rely on rates continuously falling. Those are the two things it relies on. And I don't think we're going to get good growth from small caps, right? Tech stocks, Qs. I'm bearish on Qs. I'm not like super bearish, but I don't think, I think tech is running out of juice at this point. Because earnings might be okay, but they keep, I think a lot of this, Apple right now, Apple's breakout, AAPL, Apple's breakout had to do with the cycle of iPhones. Look how much this is overheated on the RSI. Very overheated for Apple. This was a monster trade, by the way, for Apple. It's overheated. Apple is overheated. It's over owned, right? I call this basically, are you overheated? Are you cooling off? Or are you starting to heat up? It is overheated. It needs to cool off. It's not cooling off yet. Tesla, same thing. Tesla's overheated. It can go long, it can go higher, but we're talking over the next 3 months, it's a little overheated. Nvidia, okay? Has been cooling off. So Nvidia is not too bad, but it still looks like it's not great. I like AMD better. AMD starting to heat up, right? You can see AMD starting to heat up a little bit. I like AMD for sure. But you know who is not heated? You know who's starting to heat up barely? Caterpillar. Caterpillar has businesses in our Caterpillar is in China. China is re-stimulating. If Trump does come in and say we're going to cut taxes, we're going to spend bills, we're going to deregulate, Biden, same thing, is going to print money. Guess what? That's more infrastructure build. Caterpillar, in my view, is one of the number one infrastructures. Plays on infrastructure, my bad, plays on infrastructures. So I like Caterpillar as a Dow stock because it has a nice wedge pattern, nice breakout pattern. The RSI is starting to turn up. The momentum is picking up. It has a catalyst. And if growth continuously slows, it doesn't matter because Caterpillar doesn't rely on the consumer. It relies on lower interest rates and more fiscal spending. So I like Caterpillar better. I like AMD. AMD doesn't care about consumers. It cares about the chip cycle. It cares about, more stimulus when it comes to artificial intelligence. And Apple, Amazon, Google, Meta, Microsoft are all spending on AI. They're spending hundreds of billions of dollars. So AMD still has a theme here. AMD can still go up. Okay. If interest rates go up, AMD doesn't care as much. It just doesn't. It just doesn't care as much. AMD just needs to deliver. Okay. This isn't AMD. This is Caterpillar, but same thing. AMD, Caterpillar. Those are the two I'm looking at here. Right now, CEG is another one. CEG is Constellation. This is a utility stock. I never trade these, but it is forming a wedge pattern. Maybe it has one more pullback before it takes off because there's no doubt that energy usage has to climb going forward. Okay, I didn't even see these comments. We'll go over these comments. I see you at 280. Bullish. Yeah, I think we're still bullish all year. I'm just saying, hey, I see a correction coming. The market is a little over. The Qs and tech stocks and the S&P a little bit are overheated a bit, and I'll show you some more charts. We got a flood of comments here. Hold on. Let me get some of your guys' comments. Let me see if I didn't miss any here. All right. So what's a good entry for AMD? What's a good entry for AMD? We'll go over that. We'll do AMD entry. The entry was lower down here, but you want to see AMD pull back a little bit if you're entering. And it depends. Are you doing a credit spread? Are you just buying shares? Are you just buying long calls, right? The way you trade AMD depends on what product you're using. For sure, right? It really depends on what product you're using. I would wait for a pullback, right? Or the longer the consolidation, the better. You might get that breakout. But AMD is still heating up. If we go to the weekly chart, it still has a way to go for the RSI, and AMD always goes oversold. It gets overheated. It's just like Tesla. It gets overheated. So the move has already started. Wait for a minor pullback and some support. Don't just chase it. You might not get it. But you definitely want to get a good entry. Let's look at the last 30-minute chart to see, is there a good entry? So if AMD, comes back into, I'm going to say if we see AMD come into like 175, somewhere between 175 to 180, could be a good entry point. But there are other factors, there's other factors you got to look at, not just, does it touch the level? Does it support the level? If you see some consolidation, you might want to enter. Who knows? Watching for the next week. INTC might move as well. 36 calls on that. 82 for, I'm not sure what he's looking at. 82. Okay, I see. INTC. AMD moved another. Good advice. Shares to flip. Yeah, if you're using shares, it's a little different. What's your Twitter? My Twitter's on my profile. If you go to my profile, you'll be able to see my Twitter. I don't even remember my Twitter. I hate doing social media stuff. If you go to my profile on TikTok, my Twitter should be on my profile for TikTok. You go to my website and I think it has my Twitter on there. I'm not sure. You should be able to find it, man. Just look. J Fielder Strat. I think it's J Fielder Strat. Check it out. I think it's J Fielder Strat. Anyways, okay. So AMD, I like AMD and I like Caterpillar at the moment. Tesla's already ripped. Okay. I'm sorry. If you miss Tesla, you miss Tesla. I got out early. I got out at like 220 and it kept ripping. Now I'm short Tesla at the moment, but I'm not going to tell anybody why. I'm using credit spread, so I'm not like taking a big position. I'm just short on tech at the moment. I'm not going short on tech, but I'm betting that tech doesn't make another big move. I think it's going to be the bond market. Okay, let's go to the bonds real quick. Everything is in the bonds rally. Now the two stocks I am bullish on are Caterpillar, AMD. Let's see, where else am I bullish on? I think Robinhood needs to rest. And if you guys, if you guys were here, a week ago, 2 weeks ago, we've been talking about Palantir. This thing ripped. Palantir is also overheated though. It's overheated. Don't go chasing Palantir. It is overheated. Yes, it is testing previous resistance, but it's a little overheated. I would wait for a pullback. And we can do the technicals to see where the pullback might be. I think the pullback should be around 2550 using the Fibonacci for Palantir, but it's a little overheated. Don't go chasing Palantir. All right. I wouldn't chase it anyway. So what else do I like? I like AMD. I also like, where is it? Amazon. I like Amazon. Amazon's showing a pullback. I just want to see the RSI come down a little further. Amazon with the pullback and support of the 190 level. I definitely like Amazon. Amazon's one of those names that can still move higher with the Qs or tech being just moving sideways. These names, these are basically their own indexes. Amazon, Google, Meta, they're $1 trillion companies. They're the size of a lot of indexes, which means as long as they have a personal catalyst and they're not super widely owned, they can move up. I like Amazon. It hasn't really got a lot of play like the other stocks. Meta also, if you want to look at the two big mega caps that haven't moved, Meta and Amazon are two that I think could have some legs here. All right, Meta, Amazon could have some legs. Those are the two big mega caps. I like Caterpillar as an infrastructure play. Okay, what else am I missing? We're gonna get to crypto. If you guys are waiting for crypto, we're gonna go over crypto in a second. I just want to save some time for crypto. Participation is up, over position. Yeah, here's the chart I wanted to show you guys though. The over positioning. Here it is right here. You guys ain't gonna be able to see it on TikTok, but basically, active managers, you saw them basically sell off yesterday. Once you get fully positioned, okay, and I made a small video about this, there's going to be a correction. The first over position was October of 2023. We declined 10%. All right, 10% pullback. January 2024, when we got to this level, over positioned, we corrected 2.5%. I think this was March, 2.5%, and then it was April, 5.5%, May, 2.5%. So we're here again. We got a 1% correction on the S&P, but we're very overextended. I just want to keep emphasizing we are overextended. Okay, and it doesn't mean we can't keep going, but eventually there's going to be a correction. Okay, where's the pullback? Where could the pullback? Here's the big term trend for NDX. Here's a small term trend. Let's do some fibs to see where that correction could be. I don't think we come down this far. Let's see. I think we could. This was the last pullback. I think, yeah, it's possible we come down here. Actually, let's do QQQ. I know a lot of people don't really look at NDX. Let's look at QQQ. Where could that correction be? If this is the top, there's a gap down here at 468. Okay, we got a gap down here at 468. You can see the RSI is just it's getting overheated. If we make a lower high on the RSI, we're going to roll over pretty sharply. Okay, and I think it's going to be earnings because tech has moved up into earnings. Right? It's buy the rumor, sell the fact. Once we get the earnings reports, if the guidance is not better than it was, which I don't see how it's going to get better other than Constellation Energy, because that the guidance for Constellation has to go higher. Mega cap is spending into utility companies, infrastructure, right? So the companies who benefit from the spending of the mega caps, I think their earnings are going to be great. But mega caps themselves, they're just doing a lot of capex. I think they're a little overextended. Um, what else do we have here? So damn, what was I getting at here? What was my point? We're overpositioned. And I think we're going to get an earnings sell-off. The probability is increasing in my view. I think the probability is increasing. There's still some other stuff we can look at. All right. So we're a little overextended. These are the names. Tesla overextended for sure. And you never know with Tesla. It's just not a great risk reward. Bitcoin looks amazing. Before we get to Bitcoin, this is the next segment's going to be bonds and Bitcoin. Okay. Look at TLT here. Okay. TLT has everything to gain in this environment. This is a slow growth, slowing inflation environment, perfect for bonds. This is the perfect conditions for a breakout in bonds. I think by October, we hit 100 in bonds. Okay. I think we're definitely getting a rally in bonds. If the Fed cuts interest rates, okay, just to think about this, think this through. With the Fed cuts rates, that means people are going to be piling into bonds, because a cut in interest rates means banks who hold a lot of US treasuries, they can keep leveraging up on treasuries, right? That means bonds go higher. They're going to leverage up on treasuries because now they can start loaning again. As interest rates come down, there's going to be more confidence that borrowers will not be defaulting on their loans. I know this is very technical. This is why you should take the course when I'm done with it. I'm building a course on all this so you can understand the dynamics in the bond market, right? So basically, if the Fed cuts rates and we keep getting, recession concerns rising, bonds are going to explode, right? The only thing holding back bonds is going to be the US Treasury, and I'm going to put this up here, spending money. So the TGA account, all right, we're going to look at the TGA. This is the Treasury General Account, and I think this is coming. The Treasury General Account is the bank account. This is the spending account for Joe Biden, Janet Yellen, right? The US Treasury, fiscal policy. So when it goes up, when this account goes up, they're draining liquidity from the system. Okay, they're draining liquidity from the system when this goes up. They're removing your tax dollars. They're collecting, they're selling US Treasury bonds into the market to collect cash. Now they're at full capacity. So my expectation is, not if this falls, as the economy decelerates, as unemployment goes higher, as GDP and recession fears go higher, you're going to see them spend this right back into the economy. More infrastructure spending, which is why I'm long Caterpillar and I'm long utilities, Constellation Brands. I think, is it Constellation, or am I saying it right? Right. I don't know. Whatever the utilities company, CEG, they're going to keep spending, right, on chips, on AI, whatever they need to, they're going to spend. So as this comes down, more liquidity comes into the market. Where is it headed? It's headed into anything that supports the US economy. And that's one reason bonds might have some trouble. Either way, the initial slide should be a boost for bonds, the initial slide. Now, who benefits from this entire condition is going to be crypto. No matter what, crypto benefits from more stimulus, lower rates, recession. They benefit from everything. At least that's what I think. Tesla's just a little too high at the moment. I think Tesla's up too much. I think you need to wait for Tesla. That was a big trade, but let's see, CEG. Yeah, Constellation Energy. I don't know why I said brands. Constellation Energy. Bullish on this, bullish on Caterpillar. And then let's go to Bitcoin. Just go to Bitcoin. All right. We'll do some technicals here. So Bitcoin has a couple headwinds, and I think these headwinds are starting to disappear. Number one, there's been some selling pressure because of the Mount Gox event, which is people who had lost their Bitcoins a long time ago, got them back. I don't even think they're really selling. I don't think too many of them are selling. I think it's just short-term fear that they're going to sell and overcome overcome demand. There's a little bit of selling in Bitcoin. Either way, look at this RSI. It's already reset back to oversold and it's starting to pick up momentum. It could have one more correction. It is Bitcoin, it is crypto, very high volatility asset. Either way, you're in the sweet spot for a recovery. Does it break out on this move? I don't know. But either way, this is a sweet spot for Bitcoin because it's already reset the RSI. I think it can still come down to 50K if if you get one more crash. This is why. Look at the RSI. We're low here, but the weekly RSI and things will go the way and you don't expect them. The weekly RSI can still make another move lower. I think we get one more move lower. I could be wrong. Like this is where I would accumulate. Either way, the you have the RSI starting to reset, and then you have the anchored VWAP from the previous pullback. Well, I guess it's two pullbacks ago, but the previous consolidation, you have that RSI. I'm sorry, you have the volume weighted average here too. So I'm looking at this. If we do the Fibonacci, right? If we do the Fibonacci, which just retraces how big the move should be, same here, 50,000, 52,000. This is where I think we're going to bounce. If we make another move lower, we might not. Okay. So that's the first thing. Technically, Bitcoin is in the sweet spot. Now, Bitcoin bottomed already? Probably did. I mean, I'm just saying, you never know, bro. You can't call Bitcoin for sure. But I think it's definitely more towards a bottom than anything. And it depends your time frame. If you're talking, it bottomed in the next week, you could be right. But Bitcoin could have one more sharp sell off. It always happens, something you don't expect. Now the other headwind for Bitcoin was Germany. They had like 50,000 Bitcoins and their government has been selling them. They got them from like some pirate scam online. So they've been selling the Bitcoins. They're almost done. They're down to like 5,000. So they pretty much sold their supply. This is the selling pressure. Once they're done selling, more optimism because the exchanges and the Bitcoin ETFs are scooping up all the Bitcoin, right? They're scooping up everything that is being sold, and you're starting to see buying pressure pick up for Bitcoin right here. Damn, what's wrong with this? You're seeing the buying pressure starting to bottom out and pick up. So yeah, I think Bitcoin is pretty much bottomed, but I think you still could possibly come down to 52, 51,000, a sharp shakeout rally. It always happens, a shakeout before we move higher. Probability is like 50%, who knows, right? The other part is, let's check out the cycle here. Hold on, let me get the comments. 8% gain on TLT though. What is small caps? Small caps are IWM, Veronica. Small caps are IWM. They're basically, they move a lot, but it's really shaky right now. I think they look very good technically. I would just wait a little longer for small caps. I'm not bearish on them. All right. So next part of Bitcoin, right? You guys won't be able to see this on TikTok. I'm just going to talk you through. If we look at the cycle, okay, this is the banana zone. You guys can see it right there. We're still consolidating. This move is nasty. Now, Bitcoin, is it going to move the most? No, Bitcoin's going to have the smallest move, right? It's going to be like Nvidia. It's going to make a gigantic move over time because there's so much demand for Bitcoin. Let's just think about it. You're getting more friendly. How do I say this? You're getting a lot more friendly regulation from Trump. Okay. Trump is supporting Bitcoin holders and crypto in general. That is so bullish for the space. That's ridiculously because we've had nothing but negativity. Now you're getting pro-regulation, friendly regulation for Bitcoin. All right. And as Trump leads in the polls, Bitcoin goes higher. Now, what else goes higher? Probably interest rates, because he's going to cut taxes, he's going to stimulate, he's going to deregulate. So rates go higher. Bitcoin doesn't give a damn about rates. It cares more about the dollar. So my point here is Bitcoin will go higher off of a Trump win. As Trump leads in the polls, we should see Bitcoin rise, expecting pro-regulation, which means more investment, more capital into crypto, the space. All right. That's number one. Number two, the demand for the ETF, people are fools here. The supply is falling for Bitcoin. The demand is insane. This ETF, the Bitcoin ETFs had the most demand of all time. They had the most demand of all time for any ETF. At one point, they had more demand than the S&P 500, okay, from January. So now you have the demand coming in and you're in the banana zone. Let me show you guys what the banana zone looks like on TikTok. You probably already know if you've seen Bitcoin. The banana zone is this. Okay, once you get to all-time highs, here's a banana zone, just goes ballistic. So we're at that point where we're at all-time highs and we're consolidating. The bigger the consolidation, the bigger the breakout. So the more we consolidate, let me pull back a little bit. The more we consolidate, the bigger that breakout is coming. I think we're going to 100K this year, possibly 150 if we get a blow off top. And I think we continue higher into 2025 if all these dominoes fall into place. So you have friendly regulation, very bullish. More, you have the most demand out of any ETF in history, breaking gold's ETF back in the 80s, whatever it was. Okay, Germany's almost done selling the Bitcoin. Mount Gox is pretty much done, right? So the selling pressure, the technicals are picking up. You have more growing adoption, more users picking up, I don't want to say picking up, but more crypto wallets around the world. That is an adoption. That's why the ETFs are even created, because they know this is a secular trend. Most people don't see it coming. Okay. And you're in the cycle sweet spot. Let's go over the cycle sweet spot for Bitcoin. Here's your cycle sweet spot. You're not going to be able to see this on TikTok, but you can hear. Hey, jump over to YouTube if you want to see this. YouTube, I have the charts popping up on there, right? Okay. So let me remove this thing on the bottom. It's kind of hard to see what I'm talking about. There we go. We'll come back to that. All right, here we go. So basically, after the Bitcoin halvening, I guess I can show it here on TikTok a little bit. Let's throw up the halvening indicators, Bitcoin halvening event. Okay, here's your halvening event right there. Okay, so after the Bitcoin halvening event, usually it takes, this is just the average from the last two cycles, it takes about 150 days, somewhere between 100 and 150 days before price action really starts to pick up, because a lot of the miners are still selling their Bitcoin to cover their expenses. The reason they're doing that is, the difficulty adjustment for Bitcoin. Basically, it's a programmatic it's not an algorithm, but it's a program, right? It's a network that makes it harder to mine Bitcoins. It makes it harder for you to collect more supply. And that means miners have to spend more electricity. They have to get better computers. They have to spend more money to get less Bitcoins. So it squeezes them out of the market. And it takes about 100 days, right? 3 months, 4 months. It takes time for them to squeeze out of the market. And as they get squeezed out of the market, they sell the Bitcoin. So you're getting more selling pressure. But once they're gone, all the Bitcoin adjustment basically kicked them out. Boom, price starts to rise again. The selling pressure ends. The selling pressure is over. Therefore, demand is still picking up. You're getting institutions come in. You're getting ETFs come in. You're getting investor funds. You're getting RRAs, right? And those selling pressure is gone. Mount Gox is done. Germany is done selling, and the miners are done selling. They have to hold the Bitcoin now, and they're done. They're not mining anymore. They're just going to hold it. So there's going to be a flip of conditions that takes 150 days, and we're at 90 days at the moment. We're somewhere around 90 days. Okay, right now we're at 90 days. We have, if you want to measure it versus other cycles, 150 days would take us to 150 would take us to September. So somewhere, I think, between the end of October. Oh no, I guess October is after September. I'm going to say end of August. Somewhere between the end of August and September, we should get nasty price action for Bitcoin. We should get a very strong rip higher, purely based on supply and demand. Now, there could be some other shocks, but based on supply and demand, Bitcoin should be picking up. That is the average, right? We're at 90 days. 150 is the sweet spot for the cycle, purely based off the halvening. Okay. Not really interest rates. And by that time, think about it. By September, the Fed cuts rates, another catalyst for Bitcoin. Trump is up in the polls, another catalyst for Bitcoin. This is going to be a nasty rally, I'm telling you. And my biggest holding is not Bitcoin, it is Chainlink. Because I think Chainlink is going to outperform Bitcoin, just like Ethereum. Number two. All right, here's the number two thing. When it comes to the bottom, I think what is this? The cycles. These are the actual cycles, right? The cycle peak, and you guys won't be able to see this, but the cycle on TikTok, the cycle peak happens around 600, 700 days. We're at 400. So we still have another year on average before the cycle peak. We have another 365 days on average, right? This is all speculation, but this is based off the of history, off of correlations, right? We still have another year of upside for Bitcoin. So we're in the sweet spot. We are in the sweet spot. Post halvening, we're post halvening 100 days, we're at 90. And then the sweet spot, we still have another. So this is going to be a nasty rip higher based off supply and demand. Um, Less supply, more demand, better regulation, lower interest rates, and then you have money supply picking up at some point. And this isn't just the US, right? Other economies that are in recession, they're going to increase, their central banks are increasing money supply. They're going to buy more Bitcoins. It's going higher. So Bitcoin's going to be nasty. And then you can see, obviously, we're in the banana zone and we're still, we're still we're still coiling up. So that's your Bitcoin forecast at the moment. If we look at Ethereum, actually, you know what? Let's look at the next move. Where should the next move take us? Let's do some Fibonacci. All right, so the next move, if this is the low, let's say 150 is the low, the next move should take us to about, I'm going to say it takes us to 85, 90,000 on the next move before we have a pullback. Okay. And then we probably consolidate and then we move to 100. That's just, it's just a model. It doesn't mean it's going to be perfect, but I think we go somewhere around here, 85, 90, and then we take another move to 100K. This is within the next 6 months. You have too many catalysts for this not to be a high probability. You have rate cuts, lower interest rates means more stimulation into the economy, into, borrowers can borrow more, capital markets basically lever up on treasuries, and as they leverage up on US treasuries, they're going to be able to expose themselves to risk assets. Bitcoin's the number one risk assets. They're backed by Trump in the political realm. And then pretty soon Biden's going to have to come in and say, look, we need the crypto holders also. We're fighting for votes here. So let's go pro regulation. So this setup is just golden for crypto in general. Bitcoin's your safest asset for sure, but you're probably going to get an altcoin cycle also pick up. Right? So that's what I'm seeing there for crypto. Chainlink is still, I think is number one. Here's sort of that rate cut expectation in September. Yeah, so that's it. That's your Bitcoin stuff. Let's go. Let me put that banner back up. All right. So melting inflation. Inflation is melting, but we are, the economy is starting to cool. We're looking for a rate cut in September. We're getting a disinflationary rotation. And just so you guys know, that rotation into small caps, IWM, the reason it's happening is NASDAQ or big tech stocks are overheated. They really don't care. Tech stocks with, higher interest rates, tech stocks still go higher. It's irrelevant. They really don't care. But higher rates hurts small caps. So now that there's more expectation for a rate cut, small caps are going higher and they're under owned, right? They're not over positioned. That's S&P and that's NASDAQ. So they're going to have a rally here as long as the Fed stays dovish, as long as the Fed doesn't use any hawkish tone. And I think they're going to be more likely to be more dovish. But the risk of Powell saying, we don't know if we're going to cut in September, because everybody's expecting this. Everybody's expecting him to tee up rate cuts for September. They're expecting him to open the door for rate cuts for the first time, actually say it's possible we cut in September. If he does not deliver that message, then I think we're going to see small caps not really make a huge move. I think they're just going to keep consolidating here. All right. Until something breaks. And then their earnings suck. So I don't believe in small caps that much. But, the upside for small caps is that something breaks right away and the Fed just starts to stimulate and they reverse QT completely. Layer 0, do not fade interoperability. Okay, you know more about that than I do, Doifer. I don't really know about ZRO USD. I'm just gonna stay. For me personally, there's so many things to look at. I'm just gonna stay on Chainlink. All right. What else? Hey, any questions? What do we got? We got questions here. What do you guys want me to go over? We've had 59 minutes. We covered a lot. Inflation is melting. Unemployment is going to be a huge signal for the market going forward. The recession or the weakness continues to spread. If we look at the ISM, It's spreading in the last 2 months, but I still think the ISM goes higher over the next, 12 months. It bottomed in like 2022. Uh, Small caps probably go higher, but I like bonds and Bitcoin a lot better. I like Constellation Energy, CEG. I like Caterpillar. I like AMD. I like Amazon. So those are my picks. ALAR dropped. What do you mean there, bro? Not sure what you mean by it dropped. Okay, so let's do some. Oh, there we go. See, look at we're getting that sell off. There we go. We're getting that sell off in the S&P at the moment. What do we got? We got like 20 minutes. I just think we're overheated here. I think we're a little overheated. Um, if we the fact that we couldn't close above this level, and the thing is, look at the reason I'm getting excited. I got a short. I'm shorting the Nasdaq at the moment. I'm short the Nasdaq. Okay, just make it clear. I just don't like to say it because how am I short depends. I'm not saying go short it. I'm short the Nasdaq, but I'm short Nasdaq. I'm short Qs at like 520. No, this is the spies. I'm short Qs at 520. So if I go QQQ, I'm short the Qs up here. I have a basically a credit spread, and I am creating content for you guys to learn these, and I'm going to create content and videos for that. Um, later on, but right now I'm focused on building this macro course. This is going to take time. But what you get here is the ability to see, more of the market. A lot of people just talk technicals or they just talk recession. They're always talking this fear crap. I'm going to give you the real data. Let you decide. Oh, you're with me on the Qs. Yeah, so I'm short the Qs. I'm glad this happened because my position, I might add to this. I'm going to wait till Monday to see. I might add to my position, but I am short the 520 calls on Nasdaq ending like August. And all I really need for this to really go into the money is for the Qs to make one more low around like 483, and I'll be up like 50% on my sold calls, and I'm gonna get out. But I'm short the Qs at the moment, so I want them to go lower. I'm also short Tesla. I'm sorry, yes, I'm short Tesla. I'm short Tesla at the moment because Tesla sells off hard when it does. Okay, I'm short Tesla debit spread here. Put debit spread. So I'm barely putting up any capital, right? Very low capital. And I think I'm short like the 210s, 210 puts. So as long as it makes a sharp move down here, and I think it bounces. I want to get long Tesla. But I just think it exhausted itself. It was so overbought at the moment. AMD, I am long AMD. I'm actually long AMD at the moment. But you know, I don't really AMD. It really depends how it moves. So Tesla probably comes back in this zone, 218, 220. I don't really know. I'm not going to predict it. I'm short Tesla. I'm long AMD. Very low risk position though. I'm long these call debit spread. I'm sorry. Was it call debit? Yeah, call debits. Debit. I'm sorry. Is it debit spread? You selling uncovered calls? No, I'm not selling uncovered calls. I'm selling credit spreads on the Qs, credit spreads. So I collected credit for selling at 520, ending like August 23rd or something. I don't remember. I have a couple positions, but I am short the Qs in the short term. The reason I don't like talking about it too much because it doesn't make sense unless you have the same strategy as me. You don't just short the Qs for no reason, right? But I am letting you know that my bias is more short over the short term. And I did make a video that said, hey, correction in the short term. I could be wrong here, right? That's why I'm long AMD because I think AMD still has momentum. It might pull back a little bit, but AMD does have some momentum. I like AMD. I think AMD needs to hold like 175. I think it needs to hold 175. And I'm taking very low risk on AMD because, what is this stupid TikTok thing? All right, there we go. I think AMD can go to 200. If they beat earnings, I don't want to say they crush earnings. If they come out with a new chip, there's a lot of talk about AMD with this new chip. It's been lagging behind NVIDIA. I think it can make a big move to 220, into August. I think we go to 220 into August for AMD. So that's why I'm betting on AMD, right? It's not going to be as sensitive to the Qs as, let's say, Apple. Apple's way overbought. Microsoft overbought. Meta looks good. Amazon looks good. They're not overheated. Actually, what does Google look like? I haven't looked at Google. Google's Google looks weird. Nah, Google looks like it's gonna roll over. Google looks like it's gonna roll over. I don't like Google either. If you want to go long copper, here you go. Oh, you know what? There's another couple plays here for industrials. That's what I wanted to show you guys. So the most under-owned names right now are going to be in materials, S&P materials. Who do you say? AMD any good now? Look, um Caldwell, whatever your name is AMD any good right now? It really depends how you're trying to enter AMD. I would say no. I would say no. I'm long AMD, but I already I'm up in my position, so I wouldn't take one now. Nvidia, mm, I don't really like to talk about Nvidia. I think I have a bias against it. I really don't know. I'm going to be honest with you. I cannot predict Nvidia. I just cannot predict Nvidia. So I'm not even going to try. I think because I missed it. So I always have a short bias, but this thing always proves me wrong. It does look like it's going to make another move higher. I mean, this is pretty bullish, but I would wait for this RSI to really come back here. I want to, when the RSI really collapses, Nvidia's a long. I'd say Nvidia's a long. So we'll see. I'm not sure about Nvidia. I'm really not. I am more bullish on Amazon. Just broke out new highs, finding some support. I even like Meta a little more. Okay. Not as bullish on Meta, but I would be more bullish on Meta. Palantir's a little overdone. I like Caterpillar. I mean, this is a very nice. Caterpillar has the RSI momentum starting to pick up. Let me get rid of these fibs really quick so you guys can see. It's in an uptrend. Okay, it's in an uptrend. It's been holding this. It goes up, comes down, right? Making higher lows. Caterpillar looks really good, making higher lows. And it's in this wedge pattern. This is a bull wedge pattern. Does it break out? I don't know, but I like the momentum, right? I like the momentum. It's starting to clear. It's trying at least to clear this previous resistance zone. Starting to clear right here. Here we go. Starting to clear. So it has momentum. The RSI is picking up, right? And if the consumer slows down, I really don't see Caterpillar being hurt by the consumer. If anything, unemployment rises, the Fed is closer to cutting rates. Caterpillar wants lower interest rates because lower interest rates means um, Caterpillar can fund more operations and more bank loans to build infrastructure. And even if they don't, guess what? There's going to be more fiscal stimulus for infrastructure to build roads, to build schools, to build who knows, whatever it is. And Caterpillar benefits from that. So that's why I like Caterpillar at the moment. Oh, okay. Some of those names. Here we go. Here's some names that are very under-owned. We have for materials, right? XLB is the ETF. Okay. And the earning expectations are very low. Some of these have very low expectations. This is the index. I don't want this. I'm just going to go over some names in it. FCX. Okay. And the reason, because the ISM is starting to reaccelerate. I still think ISM goes higher. Here's your ISM. And when I say ISM, I'm talking about the manufacturing index. Yes, it has declined for 2 months and it looks very weak, but underneath the hood, I mean, if you go back here, the momentum's still picking up. I still think it's in recovery zone. I think we're recovering. Bank loans are picking up. My bet is Joe Biden is going to keep printing money as long as as long as he stays alive, he's going to keep printing money, right? So this is Freeport McMoran. Okay, I don't know what it is. McMoran, Freeport, whatever. Broke out of this big wedge pattern and it's starting to climb, right? It's making higher lows. It's supporting the previous level. So I like this name. Okay, this is part of the material sector, which is very under-owned. So as we're getting the rotation, there is a rotation. It's not just small caps. This is not a small cap. The rotation is into the unloved names. If you get Fed rate cuts, more building, the reacceleration in the material sector, natural resources, this goes higher. So I like that. NEM is Newmont Corporation. Look, this thing is accelerating. Had a very low, this thing was in a downturn. Now it's starting to pick up because I believe that the industrial sector is going to pick up. There's going to be more infrastructure, more spending, especially if Trump does win or Biden. Either way, they're going to keep spending. China's starting to recover. Europe needs to stimulate. These are mining companies. Okay. They don't just do mining either. They do a bunch of things. Look into it. I'm just showing you the technicals. This has some momentum. Damn, this thing broke out. I missed it. So you got this. You have LIN. This is Lindy Corporation. This one hasn't moved yet. Okay. The RSI is starting to pick up. This one hasn't moved yet. So you have some dust to clear here. Google never rolls over. Yeah, you're probably right. Do you hold any assets for long-term investment or just trade? Um, do I hold any assets for long-term? I mean, to be honest with you, Tigger Media, I believe that I'm more of a higher risk dude. So if I did, I would hold bonds. I would hold some bonds. I'd hold some Qs. I would hold some Bitcoin. But I'm not at the place where I really want to hold that. I'd rather make a bigger move by just holding Chainlink. So it's not something I would, I would advocate for other people. But for sure, if there's a long-term investment, I think Chainlink's going to go to 500 billion market cap, and it's barely at like what 10 billion. So I'm going to hold that as long as I can. I really can care less about having a very, distributed portfolio. I don't care. I'm a trader, right? I trade and I want to hold something that I think is going to do a 10, 20, 30x. And I think that that asset is Chainlink. Maybe in like 10 years or in the future, I'll, invest in something, but I'm an active guy. I'm watching the charts, I'm watching the macro, I'm watching the fundamentals. So I don't really need to just say, oh, let me just stay safe. I can see what's happening. And why get a 10% return a year when I can get 1,000% return in like 3 years? I can care less about just holding something for a long term. Now, if I did have like an account where I would just hold something, it'd be Tesla. It would be Tesla. It makes no sense. Everything is the same trade. It makes no sense to me to hold a little bit of S&P. It makes no sense. The future is technology. And if, I don't want to say if you take the course, but you'll see in the course that every bull market was driven by innovation, technology, right? Something that brought productivity. That's what my bet is. If I have the information, if I have the knowledge, I'm going to invest in the things that are going to produce the economy, that are going to increase GDP, regardless if the population declines or not. So if I held anything, it would be Palantir, Tesla, Bitcoin, Ethereum. AMD is a trade. I don't know about AMD long term. Bitcoin, Ethereum, Chainlink, those are the things I would invest in, right? And I'm still going to trade them at the top because when we get the down cycle, which is the benefit of the knowledge, once you get the down cycle, well, things are going to decline by 50%. Therefore, I don't want to hold a 50%, decline. I want to buy back at the bottom. Now, that skill set is going to come with your understanding of macro cycles. Therefore, I would never advocate that to anybody. So that's why I'm trying to build a course, because I think there's a better way to do it. Uh, hi, Joe Nye. I'm sorry. I see you there on Instagram. This is I cannot read your guys' names. I'm sorry. A lot of the names they don't make any sense to me. So forgive me if I say your name wrong. It looks like Dewart Cartel, bro. I don't even know. Um, Nye Postman. See, I can't. I don't even know. I'm in America, so I don't really know what that is. But yeah, Caterpillar. I like Caterpillar right now. This is probably the best looking chart that I have. Just so you know. Any word from Mara because of Bitcoin? I know a lot of people are looking at Mara. The problem with Mara is these options are so inflated. The IV is so high. Just hold crypto, in my view. Just hold crypto. Don't go chasing Mara. They look like they're good trades, but honestly, they're not going to do much. The risks are too high for earnings. Anything can happen here. You could sell the volatility. You could sell puts. You could sell, credit spreads on this, but I just think the volatility is way too high. It's too expensive, and it's better just to own some crypto. It's all the same trade. It's all the same trade. So which trade is the least risky? The one where you hold the actual asset, not these derivatives. Unless you know how to trade derivatives, oh, it's cheaper. No, it isn't. It's not cheaper. You buy the same amount of Bitcoin as you buy of Mara. It's not cheaper just because the price looks cheaper. It is not cheaper. You want the quality stuff. You don't want to be buying this trash to own. If you're trading it, it's a different story. CYBN Magic Mushroom Pharma from Firm Canada analyst got target is a 10x C. Okay. C by, hey, I know that market is coming. So if you get in early, great. The question is, who's the competition? Who are they competing with? And do they have an edge? I have no clue. I'd have to do research on it. Wow, this thing was at 350. So this is a magic mushroom stock. I don't know if you could even say that on here, but hey, maybe throw a small portion in, just see what happens. But yeah, here it is, CYBN. Hopefully they have the best. Hopefully they compete better than everybody else. Some of you guys want to look at Cooler. I'm still waiting for Cooler to hold 40 cents. Still hasn't been able to hold 40 cents ever since that big pump that we saw. We got like what pump was this? From the break. From the break, I mean, this thing pumped 330%. I got mostly out around here, 75, 80 cents. Did not top ticket. And I started to get a little bit in around 37 around this formation, but it failed to break out, failed to hold this. It might hold this, but either way, it's Cooler Technologies. Just look into it. The pump is coming for, you think it's coming from Cooler? I'm waiting for the volume to come in. This should have been it. We'll see. I mean, rate cuts should definitely send this higher. So I think we're getting near. I don't want to hold another big drawdown. I want to hold the momentum. I'll take a small loss here, but I want to hold the momentum. And I'm not going to take a big drawdown on this. I think it was this gap down that got me out. We gapped down and then we couldn't hold above it and I was out. Flux power. I have no clue what flux power is when it comes to the fundamentals. So I could not tell you. All I could do is do the technicals, and it looks like, in general, it just looks like a pumpy stock. It pumps and it comes down, pumps and it comes down, pumps and it comes down, making lower lows. Oh, it looks like it's holding this year. Maybe it pumps. This, just by looking at the price action, I can tell that this, whatever this is, it needs a catalyst, Tigger Media. It needs a real catalyst that the fundamentals need to be good. So I don't know, but here's a gap. There's a gap to be filled right here. There's a gap right there. So I don't know. I have no edge. Don't even know what it is. Flux Power Holdings. I have no clue. What is this? Electric vehicle, a play on electric vehicles, a play on battery technology? I have no clue. No edge on it. So I don't know. But I will say that once we get closer to the September rate cuts, a lot of these names can really move. What do we got going in Bitcoin? I can see it moving. No, I guess not. I guess not. I guess that guy never responded. I also like LiDAR for computer vision cars. Man, you know all kinds of stuff. LiDAR. Not sure what that is. See, these plays right here, this might be your style. It's just not my style. This is definitely not my style of investing, or but they can pump. I just don't have an edge in it. I have no edge. I don't know who they're competing with. I don't know if, I mean, you really got to do a deep dive into these things. So I don't know. I wouldn't advocate for them at all. But computer vision for cars. This might be a good play though. I mean, LiDAR competes with against what Tesla doesn't use LiDAR. So maybe, that's probably what this pump was, is, oh, LiDAR is going to be, here's the thing. If Tesla FSD comes out and they don't use LiDAR. So if Tesla FSD comes out and they basically showcase you don't need LiDAR, this thing's going to zero, right? I'm exaggerating a bit, but it's going to zero because the use case is irrelevant. It's too expensive to use LiDAR. as far as I understand. So I think it goes to zero. Now, does that actually happen? I have no clue. That's just the risk, I would say. It's hard to bet against, what Tesla's doing. Um, what the heck? Who is this? Susie? Susie, I don't know what you're doing, Susie, if you're just running around, but you're on the wrong topic. I don't know, Susie, I'm sorry. You're in the wrong chat. Thoughts on MSTR? I've been looking at it. I mean, it's just expensive. It's very expensive. It's very expensive. Maybe check out the short interest. I don't know what the but this is like, I'm not gonna lie. I wish I would have bought this. I wish I would have bought this back here. I remember thinking about it on this pullback. I was like, how should I get in? It was at 354 call options, and I should have bought it. It actually absolutely squeezed. The thing is, I've lost so much money on this in the last cycle. And I've just learned, hey, I'm taking a lot of risk on Chainlink. So do I really need to go take risk here? Not really. Not really. It's an option play. Owning the shares could be okay. I mean, I like it, but I think it looks good. It's just not my play. I'd rather just own the asset itself. I bought the dividend and option premiums for MicroStrategy MSTY. 180 MSTY. Huh. This is MicroStrategy options. Interesting. You have an interesting style there, Doifer. Interesting style. You should create some blog posts on our website, mindgrowth.com, about your style, because you have a definitely different. There's a lot of way to make money. There's a lot of way to skin a cat. This is just not my style. Split coming. Oh, okay, there's a split coming. That'll be good. That'll be good for the stock. I know a lot of people want to get into MSTR. Do you see Rivian? You see Rivian? What do you mean, do I see Rivian? What is the ticker for Rivian? Oh, Rivian exploding. Okay. I see. This might be the time for Rivian. I've been bearish on Rivian. But it's getting a lot of I think it's bottomed for the cycle. I think this was the cycle bottom for Rivian. Could be good here. I don't like the price action that much. I mean, it's over at the moment. It's very overbought. It's overheated, right? You want it to cool off, and then you want to own Rivian when it's transitioning from cooling off to heating up. And right now, it's so heated up. Let's go to the weekly. It might keep going. It's a pretty small cap stock. It might keep going, but I'd wait for the pullback. Just same thing for Tesla. I'm waiting for Tesla. Look at Rivian is just copying Tesla. I'm waiting for Tesla to pull back maybe to like 220, right? And then finally make that real flush. This was a giant short squeeze. We called it like a month ago. We're like, this thing is going to squeeze, most squeezed stock in the market. You got the pattern right here. Reverse head and shoulders broke out, exploded. Absolutely exploded. Now it's going to take time to consolidate. What up, Yassine? Do you know why the JPY rates went higher after multiple years of negative interest rates? How does it have to impact the yen? I've seen this problem a lot, and it's hard to explain it. I don't really fully understand it, to be honest with you. But I think, basically Japan has finally gotten inflation. So this is how I would put it. JPY, USD, right? USD. I got a currency basket over here. Let me go to the currencies. All right, so USD. Oh, it's USD JPY. Okay. So the dollar is crushing. Yeah, the dollar's crushing Japan at the moment. And I mean, the dollar's been crushing Japan for a while though, right? I guess this move is very exaggerated. When did it start? January 2022. So Japan for the first time has actually gotten inflation. They've been able to create more inflation, and the problem is their bond market sold off because of that. So one thing to think about, when inflation rises, to a very threatening level. Okay, so this is the current, but this is confusing because this is let me flip this. We're talking about the Japanese yen. Let me flip this. Okay, this is the Japanese yen really versus the USD. It's getting crushed. That just looks. Let's just make it. Let's talk about it in terms that make more sense. So they were able to stimulate inflation. The problem is inflation does what? It reduces, it debases your currency. It reduces the value of your currency. So the currency value is dropping because they finally been able to stimulate. At the same time, the Fed has been increasing interest rates, which makes the dollar stronger. And if it makes the dollar stronger, that's another variable weakening the Japanese yen, right? Now the Japanese yen bond market is getting absolutely crushed. And if bonds go down, if bonds are getting crushed, that means interest rates are rising. So, wait a minute, is the Japanese bond market getting crushed? That would be the opposite. See, this is where I get confused. This is where I kind of stall. Either way, the currency, they've been able to stimulate inflation, and and I think what's happening is Japan is basically, the government is being forced to buy the bond. So they're debasing the currency so quickly, it's just getting destroyed. It's just destroying the currency. They're trying to save the bond market by buying their own bonds. It's a very leveraged system. They're in debt like 250% GDP. So they have to keep printing more money in order to buy back their bonds, their bond market, which is a very weird situation. We're doing the same thing, but just not at this rate. We have bond buyers. We have people who want to own our debt. Nobody wants to own Japanese debt. So it's just getting crushed. It's a function of debt. Now, this will reverse. You've seen this should probably reverse when the Fed cuts interest rates. It'll probably reverse for a while. Probably get that reversal. Because then the dollar will have to weaken. So that's why I'm watching the dollar. The dollar will weaken. All right, what else we got? 100%. Oh, you doubled your portfolio with Rivian calls? Okay. Nice. Congrats. Glad you're able to make it. Can't build houses, move house, or rent storage units with AI. PR. Okay, let me see. PRCH. Porch Group. Well, it looks like it's bottoming out. At least the RSI is low. I mean, if you were going to enter this, it'd be here. Who's their competition though? Porch Group. Is the AI proof? Okay, I see what you're saying. Let me see. Pool. I know somebody was investing in Pool. That's a pretty big trend. Okay, that's not a bad position though. It was oversold, so it's not bad. All right, so we're coming in at 90 minutes. Last concerns, questions. Let me know. We're coming in for a long stream. You think you get it? Yeah, the Japanese, look, I would just say this, the dollar will weaken against gold and Bitcoin as you get closer to rate cuts, especially against gold. It'll weaken against gold. I know you're looking for like some macro, some macro stuff, but the Fed is the only big government who hasn't really cut rates. As soon as what did you eat for lunch? Man, I didn't even eat lunch today. I haven't eaten yet. Have not eaten yet. I need to eat after this. So yeah. Anyways, as soon as the US cuts rates, you're going to see the dollar move over DXY, right? You're going to see this roll. It's already anticipating the rollover. And I mean, I know you trade Forex, so it's your trade, but Bitcoin's going to go ballistic. Crypto in general will go ballistic. I know Chainlinks has looked pretty bad lately. It hasn't done anything. It's depressing, but nobody can predict anything. Let's see the ETH to BTC. So it's still, I mean, it's holding that reverse head and shoulders. Who knows? We'll see when altcoin season comes. That's Chainlink versus Bitcoin. Here's Chainlink versus Ethereum, still higher than the low. And then here's Chainlink outright. Okay, here's Chainlink outright. I think I think it hits $40, 30 or 40 by July. Well, I mean, I was wrong as hell. I'm way off on that. Didn't happen. Okay, I thought this pump was it when they got the relationship with Swift, and now they're using Fidelity is using them. So it just has so many partnerships. I mean, I am long Chainlink. Out of everything we talk about, I'm mostly long this thing, but you can't predict when it moves. We got to wait for Bitcoin to pump. I do like the RSI reset though. It's getting to that oversold, very oversold territory, right? Very overcooled territory. Then it heats up, and once it breaks this, once it gets above this flag pattern, then we'll make that move to like 40. I think we'll make that move to 40 by then. So let's do the golden pocket really quick. Let's remeasure this. Let me remeasure this to see where we're at. So we take the high, we pull it down to the low, expect to move to about 18 in the short term. And then maybe by November, we go to like 30. And maybe if we're lucky, we go to 42. Okay. I'm thinking by November at this point. I thought we'd be much higher than this. Now, if Chainlink CCIP shows that there's a lot of revenue, we're waiting for that revenue, then I think and Bitcoin runs up to 150, then I think we get that big move to like 50, 80. I think we go way up here. I mean, crypto, when it moves, it does move. That's the move I'm waiting for. It's going to move. What up, Tanner? Crypto should boom this cycle, especially with anticipating of a Trump presidency. Yeah, we talked about that earlier. Trump supporting crypto. He has no clue what it is, but he's smart enough to adapt, to understand that it is not only a financial instrument to reduce the debt of the system and reduce all the over leveraged companies, but it's also a good asset that people own. So we're going higher. When is the course? You know what? I'm done giving time frames. The thing is, Tigger Media, I don't want to rush the course. I don't want to just try to make something and sell it. I want to make sure it is legit. So I'm going over it again. I'm building. There's a lot more information than I thought. There's a lot more information that I thought that I wanted to make sure was clear. I don't want you guys to have to go looking for I don't want you guys to have to go looking for, like, if, you take somebody's course and it's just, you don't understand it. You don't understand it. So I'm trying to make sure it's clear, concise. I want to take my time. I want to make sure it's quality. I don't want to throw out no trash out there. So I want to make sure it's quality. And there's some quizzes too. It's going to be interactive to some degree. All right. You're going to understand how the financial system works, how the economic system works, what drives markets. That's what it is. It's what drives markets. It is what drives markets here, and the business cycle, right? But first you got to build a framework, how this stuff works. So I'm going to keep taking my time. I don't want to just throw something out there to try to make a sale. I want to make sure it's quality. Chainlink's correlation to Bitcoin is a bit different than most altcoins. Yeah, probably is. Let's see. Chainlink BTC. I mean, it used to just explode versus Bitcoin. That was during DeFi season. A lot of people don't realize that DeFi crypto summer in 2020 actually went, like, really Ethereum went higher because Chainlink price feeds, right? The ability for DeFi to come online. This was called DeFi summer. And that was all due to Chainlink price action. This was due to Chainlink's protocol, not price action, protocol. So Chainlink exploded. So now we're waiting for interoperability. We're looking at the tokenization of all real world assets. When that is realized, you enable DeFi or decentralized finance on the big ledgers, not just crypto. We're talking blockchains from JP Morgan, Swift, DTCC. Every investment bank, every major investment firm will be using CCIP underneath the hood. You're not going to see it, but we'll just be able to see the revenues from CCIP. And that's going to take Chainlink a lot higher. It is the number one in its space. I think it has the best use case on all of crypto. I really do. I really believe it has the best use case of all crypto, including Bitcoin. Bitcoin has one use case. Bitcoin's use case is digital gold, right? You can't debase it. It is property, it's digital property, but it doesn't really do much else outside of that. That's about it, right? Chainlink has the biggest, widest use case by far, but it's still in the early stages. You really got to be patient. Lastly, REITs are moving up, maybe for lower interest rate. Yeah, that's exactly. Yeah, I remember seeing that. REITs are moving up because wait, what did this person say? Trump's not gonna win. Well, we're not debating whether Trump wins. We're just saying um the closer it gets to Trump winning, the bigger the crypto cycle as of right now, because he's promoting crypto, right? That's a fact. Um But Biden can come out and be like, you know what, we're going to be pro crypto, and that just makes crypto go even higher. Make sure it's user friendly. Oh yeah, you're talking about the course. Make sure the course is user friendly. Is that what you're saying? I will. I'm definitely working on that. Just trade ICT and be profitable. What is ICT? Trade ICT? Are you talking about internet computer? He's not promoting it. He's trying to keep himself out of jail. Um, he's not promoting crypto? I mean, I've made a couple videos. He literally is promoting Bitcoin. He's Tanner said Biden can't even spell ETF. Here we go. We got some Tanner, we got somebody on Twitter, or not Twitter, I'm sorry. Somebody on here on dang, I can't remember, TikTok, who obviously doesn't like Trump. She said, Mrs. Caldwell, is it Caldwell? She said that Trump is not promoting crypto. He's trying to keep himself out of jail. I don't see the connection there, but he's definitely trying to promote crypto. I mean, he literally said that we will mine all the Bitcoin here in the US. He is promoting crypto. He wants the votes. There's 50 million users of crypto in the US. He wants the votes. So that's all we're speaking of about that. Trump accepts crypto for campaigns. Yeah, see, I mean, he accepts crypto. I guess it's all like how you how you think about it. People let their politics get way too involved with reality. But crypto, Trump is definitely promoting crypto. Now, is it to stay out of jail? Um, I don't see that. I mean, we're not talking about jail. We're just talking about, hey, crypto's going higher because it is now a political issue, right? Yeah, yeah, he does. You're right. He tells you what you want to hear, and that's what the crypto voters want to hear. They want to hear that. He's only after your votes. Yeah, we talk about that all the time. He's after your votes for sure. I mean, Biden's after your vote too. I mean, politicians, they're after your vote, right? It's not really, it's not like he's politicians in general, they're after your vote, which is why we're bullish on the market, because most people vote with their wallets and they want a bullish market. They want a bullish economy. So they're going to, the politicians are going to tell them what they want to hear. I always enjoy political debates, but you know, we're talking finance here. It's just funny to hear what people have to say. I just want to see, are people living in reality or not? Make sure you're living in reality. Um, but yeah, either like Trump doesn't know what's going. Trump doesn't understand. That was going to be part of the stuff here. Trump doesn't know crypto. I'm pretty sure Vivek is telling him that he needs to be pro Bitcoin and he needs to be pro crypto in order to get all those votes. And if he is, and if he does the regulation on the votes, I mean, hey, Bitcoin, crypto's going higher. Crypto will go higher regardless. So it's just a positive for the crypto space. And I wouldn't doubt in the next couple months if the Biden administration comes out and starts to be a little more pro crypto to try to get those votes. I wouldn't doubt it. I really wouldn't doubt it. We'll see how that plays out. Um the reality is Trump is only saying that because that's what he's been told what to say. Yeah, yeah. I mean, both candidates, right? Joe Biden says what they tell him what to say because they have advisors. They have people who tell him, hey, you should say this. They're pretty much the face to the campaign. He's being told what to say. Yeah, that's how I described it. Vivek is probably telling him he needs to do it. This is funny to me. Um, they can both say it. Yeah, that's why it's bullish for crypto. They're both going to fight over the crypto base, right? So imagine they're like, "Hey, we're going to deregulate crypto. We're going to do this to try to get your vote." That just makes crypto go higher. ICT is a technical trading strategy run by Michael. Oh, okay. I see. I never heard about that. Huddleston has pleaded guilty for recruiting students for financial aid fraud. Michael J. Huddleston. Okay. You can research the rest. All right. Don't know about that. Never heard about that. Well, I think the best thing I can leave you, I think Nasdaq has to cool a little bit. I think we're going to cool in Nasdaq. I'm short the Qs. I could be wrong, but I am short the Qs. I'm very bullish on Bitcoin. Very bullish on crypto in general. I don't really have a bunch of Bitcoin, but I'm very bullish on the crypto space, and Bitcoin is the mover of that space. And we possibly come down to 50K. This is probably the bottom. If all else stays equal, I think the bottom is around 50,000. I think we can come touch this and shake out the last weak hands. And you're probably going to get some big people leveraging up here. And if you think about banks, right, they want if you get pro regulation. Oh, here's the other part. Most of the ETF flows were retail. They weren't even big investment firms. So they haven't even entered the space yet. And I think they're going to enter the space the closer we get to the election. The more that you hear about pro regulation, the closer we get to the big money coming into crypto. And the closer you get to more rate cuts or lower interest rates, a little more liquidity. Money supply is turning up also, by the way. M2 is starting to reaccelerate. Very bullish for Bitcoin. Very, very bullish for Bitcoin. Ethereum's another good play. I mean, Ethereum, I think it's going to outpace Bitcoin for sure. I think Ethereum outpaces Bitcoin. Just to FYI, if Bitcoin you don't like it or it's too big, I think Ethereum is going to go to probably 8,000, and then by November, I think it goes to about 8,000, and then I think it can go to 12,000 to finish off the cycle. Some people say 20,000. I mean, who really knows? At this point, you got to kind of go quarter to quarter. What's going on, right? Is inflation going to stay tamed? I think our biggest risk in the crypto market is not really rate cuts or recession. That's actually positive for crypto. Rate cuts in recession are positive. So that's why I am bullish on Bitcoin and bullish on bonds, Bitcoin and bonds, because a recession is bullish in those scenarios. Now, the reason why I say crypto over bonds is if you get a recession, I guarantee you Joe Biden, the administration is going to come out and they're going to print money somehow. They're going to give out something. They're going to do something. And then we get interest rates rise and bonds are not going to be able to go any higher. But guess what? Bitcoin will go much higher. So I'm still more bullish on crypto here. When it comes to stocks, we talked about Amazon. Amazon is cooling off, getting ready to reheat. AMD is starting to reheat already. One pullback is going to be great. If you get a pullback in AMD, it's going to be perfect. And then I think Caterpillar looks the best on a technical basis, but we're talking like earnings is coming out. So I think they're going to crush earnings. If not guidance, right? I think their guidance will be good. We'll see. I think AMD does good on earnings. Amazon should crush earnings. What else we got here? Small caps. Okay, cool. We talked about small caps earlier. Small caps look really good, to be honest. Small caps look great. The only issue with small caps is going into earnings season, right? If guidance is not very great, here's the threat to small caps. I know everybody's watching small caps. Let me put the monthly chart on so we can kind of see what it's looking like. Here we go. It's a little easier to see. So small caps are attempting to break out. But what they do need to continue this rally They need rate cuts. Okay. Small caps do need rate cuts. A lot of these businesses are underwater. They're not profitable. Most of them are not. And their borrowing costs are way too high, right? Their businesses are not doing very well. So they need rate cuts. Now, it makes them bullish in the short term. They might make a couple big moves, but if you don't get the rate cuts, if the Fed is a little more dovish, they're going to collapse. Also, the earnings are not great, so the rotation might not last. Also, if Biden comes and stimulates the market, which I don't doubt that he look at, we still have 3 or 4 months. He kind of barely okay. I'm not gonna hurt nobody's feelings, but I don't know if Biden knows. I don't even think he makes it to the end of the year. Okay, watching the guys, probably not gonna make it. Either way, they're gonna stimulate. Okay, whether it's him or whoever it is, they're going to stimulate. That means interest rates go higher, and that's going to hurt small caps. Small caps want interest rates lower. I'm not talking about Fed rate cuts. I'm talking about the bond market. If the bond market rises, that's good for small caps. But if the bond market falls, interest rates go up, and that hurts small caps. So I'm not too. I don't believe small caps are just going to go to the moon yet. I'm not there yet. Could be wrong. I think your best bet is crypto. I think your best bet is crypto at this point. And, Constellation looks good. We'll see. Hopefully I'm wrong if you're long. Costco is my best performing stock of all time. Really, Costco is a beast. I was looking at it the other day. I think it was on the weekly chart. I mean, that gigantic wedge just yeah, Costco is a monster. And this stock, let me see. Costco's earnings are great. They're sucking up the competition. It's overheated at the moment. It needs to cool down. But um Costco just eats up the competition. And people love Costco, really good brand. I think they have pricing power, so they can raise prices in certain areas and then they can eat up prices in other areas, therefore they maintain their demand. Um, yeah, it's a lot like is Wingstop still crushing it? Wingstop is up a lot. Yeah, Wingstop is one of those companies that did really good. Do you have a filter small caps to find the ones good trading volume? Um, I was looking at some small caps. I like Elf Beauty. I think this just keeps going higher. I mean, it cooled down a little bit, but it just doesn't chill out. Elf Beauty. What else are the small caps? The problem with the small caps is that whenever the small caps perform really well, they get moved out of the small cap index and they get put into the S&P. So they never survive that long. So you're right. I think individual small caps might be even better than just buying the index. I would be more profitable in the index. But at the moment, do I have small caps? Let me look real quick. I think I have them. Yeah, I do. I do. Here we go. Here you go, Doifer. So you got SMCI, and this thing looks like a freaking monster. Damn. Okay, it reset. I didn't see that. It started to reset the RSI. This might be good. This might be a good play. SMCI might actually be a good play here. Starting to break the level. So SMCI is one. Okay, SMCI looks good. Starting to pick up momentum. Elf Beauty. Price action is always kind of weird, but Elf is one. Just throwing out the names. What is this? Simpson Manufacturing Company. No clue, but this thing exploded. This is one of I don't even know what they do. These are just some of the names I got from the index that looked pretty strong. Okay, let me go to the weekly because if we do have a blow off top here, oh yeah, that looks good. Simpson Manufacturing. Here you go. RSI starting to curl up. So this is an example of a stock that is a stock or a name that cooled off and it looks like it's starting to reheat. It's trying to reheat back up. It's starting to reheat and it's in the small cap index. And if the Fed cuts rates, it's going higher. Period. This is Cytonetics Incorporated. I don't even like that name. I don't like that big move. This right here just throws me off. I don't like that. It did reset, but that's ugly price action. I don't know what it is. I don't know why I added it, but I don't like it. This looks good. This is Rhombus. No clue what it does, but you can see there's a It's just trading in a range, and the RSI is starting to heat up. Looks like this it is trying to start to heat up a little bit. Pull back. Let's see, where was that pullback from the lows? Oops, wrong one. Bro, what is this? Wyckoff? I don't use that. All right, let's see. Yeah, we could move up to about 94 here. I don't know what the time frame is. Did it pull back enough? Yeah, this one looks good. I like that. If you're looking for small caps, L Light and Wonder. This thing's going straight up. I don't know what they do. Not my type of price action. Fix, no clue what they do. Oh, this one reset. This one might be good. This was an uptrend. This is, you're going to have to look these up. I don't even know what they do. I don't know what the fundamentals are. But this had a nasty sell off. I mean, let's see if it's met the target. Yeah. So I would say, actually, is that the right way to do that? Hold on. I think I did this wrong. This thing is oversold for sure. I would just check to see if something went wrong in the business, but it looks good. Let's see what the daily RSI looks like. Starting to recurl up, daily RSI. I would wait for some momentum to come in. I mean, I bet you you probably have to go with shares. I bet you the options chain is trash just by looking at it. Yeah, Costco's better than Walmart. I'm a Walmart guy. SMCI is a 910. Is that a good one? SMCI? SMCI looks good. I wouldn't own it. I would probably do like a debit spread. I'd probably do a call debit spread on SMCI. The volatility is probably high though, so I don't know. SMCI looks good. I'm not gonna lie. It looks really good. And it still has a thesis behind it. So I think I missed it. So I was like, F that. But it looks good. SMCI is a solid name. Oh, uranium. This one's interesting. This is an energy play, uranium. These are all inside of IWM, by the way. This one looks good. This one's gaining momentum. Phototronics. But yeah, SMCI's price action is solid. Definitely has momentum. You do have earnings coming up August 6th. So we'll see how that plays out. Again, I am not advocating for SMCI. It looks good as far as price action. And when this thing moves, it moves. Sweet Green and Kava. Kava. I know a lot of people like Kava. Kava selling off in an uptrend. Not bad. Wait for that to bottom. Should be good once it bottoms out. This is like a restaurant, right? Or is it like some type of nutrition or branding, something like that? Kava? Not sure. AMD, man, we looked at AMD like 10 times. I know you guys are late. AMD looks good. Just wait for the pullback. I'm long AMD at the moment. I'm long, and I will add if I see it hold 175. I want to see it hold 175. All right, I'm out of here. My eyes are burning. My back hurts sitting too long. I need to go work out and eat. Anyways, you guys stay blessed. Stay blessed and just stay patient. Stay patient. Keep learning. Tigger, is he in the Discord? Nah, I can add him though. Tigger, just send me a message. I'll add you to the Discord if you want. I'm waiting for a pullback here. I am waiting for a pullback on the market. Waiting for a pullback here. We're a little overheated. So, anyways, Bitcoin looks great. Okay, that Bitcoin looks great. I say that all the time. Yes, add me, please. Let me see. How could I add you? How did I add you, Doyfer? Tigger, are you on my Can you send me like a private message so I could just add you? Send me a private message somehow. I can't backtest Chainlink in a YouTube stream chat. Yeah, send me a Tiger Media, send me a private message. I'll send it to you or your email or something. I'm not sure. I'm not a big tech savvy person. All right. Well, anyways, again, hey, you guys stay blessed this weekend. Be safe. Don't do nothing crazy. All right. And keep learning as much as you can. I'll catch you guys next time we do another stream. Listen, I am working on the course. Okay. It's getting better and better. And it is macro analysis, giving you a framework for the macroeconomics, how the financial system connects to the economic system. They are different. Okay. Also, policy is key. A lot of people don't really have a good framework for monetary and fiscal policy. And there's a really good framework on how they work and when they work, when they turn on, when they turn off. I call it the flow of money. I think when you see the flow of money, it's a lot easier. Um, and Yeah, there's a lot of stocks also that correlate to different sectors of the economy, and knowing when those sectors of the economy are starting to heat up, why they're heating up, is the business cycle, right? I'll give you one little clue. Um, when the business cycle turns up, earnings go higher, right? Manufacturing, hiring, uh, all that stuff. That is earnings going higher. When the ISM goes up, earnings are going to start to accelerate over the long haul, not 1 month. But when liquidity goes up, that leads prices, and liquidity started going up in 2022. So prices can be led by liquidity or the ISM cycle. And there's more to it. Anyways, that was just for the people who are looking out for the course. I'll have that course ready. Other than that, just stay subscribed and um oh yeah, sign up to the newsletter also so you can at least see when I throw stuff out there. It'll be in my description. Link will be in the description. All right, I'm out of here for real. You guys have a good weekend. Stay blessed. Thank you.